The global economy is underperforming. Growth rates are modest compared to the pre-crisis expansion, when GDP grew by an average of 4% annually. Wide divergences are seen worldwide. Some of the advanced economies are on the right track, while others are not performing as well as hoped. The Eurozone remains at risk of prolonged stagnation. Emerging economies are similarly divided, with some performing near expectations, while others have slumped.
The global economy is in low gear at this point. The private sector investment is really idling along, private consumption is weak, trade is below trend. We see a lot of risks on the horizon in the financial sector. To get out of this situation, we really need to have all three parts of policy, monetary policy, fiscal policy, structural policy, all three legs of the stool are necessary in order to get us out of this.
While the current outlook is far from ideal, failure to implement reforms bears a range of short, medium, and long-term risks.
One of the major risks to the global economy is financial risk. Emerging markets have a lot of external debt, and we worry about how changes in market sentiment is going to affect that emerging market debt. This particular measure of market sentiment is the VIX. It represents the sense of how much risk there is in the economy. And you can see that it's slow, but then it spikes up on occasion. And you can see how we've drawn in smiles on this chart. And what we're looking at right now is we're looking at the lowest part of the smile, where VIX is lowest. That means that we're looking at it going up, that VIX is going to go up in the future. We're looking at likely financial market volatility in the future, and this is a major risk for the global economy.
The weak performance in Europe is another major concern looking ahead. Since the crisis, domestic demand in the euro area has fallen substantially, exerting a strong drag on GDP growth.
The euro area really is at a standstill at this point. It has a real risk of zero growth and zero inflation going forward. Now, within Europe, there are very different types of countries. Some at the periphery have undertaken dramatic reforms, both on the fiscal side and on the structural side. They're doing better, particularly with the monetary expansion by the ECB. At the core, those countries have to take more structural reforms, both the countries in deficit and the countries in surplus.
Looking further out, there's concern that countries that have consistently failed to meet growth forecasts will continue underperforming if strong reforms are not taken.
At the Brisbane Summit, the members of the G20 economies put forward a challenge to implement structural reforms to their economy that would add up to 2% of GDP by 2018. If, in fact, they implement those reforms, we could be looking at $1.6 trillion added to the global economy.